All right, good morning. I have a client that came in that I reviewed their tax return. I do this and I do it free of charge. I'll have farmers, ranchers that will bring me a return and ask me to review it. And what I'm seeing somewhat of a pattern. And if this is you, you'll know. The rancher came in and had a tax return. It was prepared by someone other than a CPA firm, let's just say, a tax preparer. There are good, very good tax preparers out there. This return came in. The first thing I did was flip to the Schedule F. I wanted to look at what had occurred just last year. And I see all of these old breeding animals on that Schedule F. And this guy's profitable. He's profit every year. So they went to the effort to put these breeding animals on the depreciation schedule. I thought, why are they still there? And I asked the guy, do you have all these? We couldn't even identify really. We had to basically identify by year. And those turned out to be all purchased animals. We were able to go back and see that he had bought those. That's one type of breeding animal. There's another, the kind you raise, the heifers that you keep, that you turn into breeding animals. So I have a feeling, and I said, what do you bring your tax preparer? And he told. And I said, do you tell them, do they ever ask, are these calf sales? Are these cow sales, cattle sales, bull sales? What kind of sales are they? He didn't know. He said, no, they never asked me that. I was like, man, that's not good. What has happened is he comes in, he brings the prepare the income. Prepare puts that income on the return. Calf sales, cow sales, whatever, livestock sales. That profit is then subject to income tax and Social Security and Medicare tax, which is called self-employment tax. So, if you have $100,000 worth of livestock sales, half of that is breeding animals, either raised or purchased. Those animals are reported on a completely different schedule than your Schedule F. They're reported on a 4797, subject to capital gain treatment. If you meet the rules, this is not personalized tax advice. If you meet the rules, subject to capital gains treatment, that's 15% versus 15% if you're in that 15% bracket plus 15.3% self-employment tax, that's 30%. So if you've got 50 grand worth of livestock sales that are breeding animals and they meet the rules and you move those off of your Schedule F to the proper schedule and it gets reported as capital gains, you just save 15.3% of $50,000, $7,500. Like that, I saved the guy $7,500 just by amending 1 year tax return. Now I can go back to the year before and do that one. My point is, breeding animals are handled differently. And if you don't have someone that is used to farming ranch activities and livestock, you need to go into your tax preparer and ask them what's the difference between a cow and a heifer? Or are there any different rules for estimated tax payments for farmers and ranchers versus non-farmers and ranchers? See what kind of answers you get. And if you don't get the right answers, you need to look elsewhere. There are all sorts of different rules for farmers and ranchers. But breeding animals, the sale and the gain of breeding animals are treated different. Let's just get into real quick the types. You got raised, you got purchased. The purchased ones, you put on the depreciation schedule, you depreciate either over time or all in 1 year. But if you turn right around and just report the sale of those 5 years later, or 8, 10, or 2 as cattle sales, and that person just sticks that right on the cattle livestock sale line on your Schedule F, you just paid self-employment tax on something that's a capital asset that you should have paid capital gains tax. Now, granted, you won't have any basis, what we call cost basis, because you buy the animals You depreciate the animals. Your cost basis is zero now. So when you sell the animals, it's all gain. Or the animals are born, you convert them to breeding stock. You have zero cost because all of your costs to get those animals are already included. So you have zero cost basis. The animals are born. You still have zero cost. You get no depreciation. But when those animals are sold, there's still capital gain treatment as opposed to ordinary income subject to self-employment tax. That's my point. If it's on a farm or ranch, it gets stuck right on that Schedule F. We could get into some other intricacies. Is pasture lease, is that Schedule F items, or is that rent property items? Is that rental, or is it farm and ranch? I'm not going down that rabbit hole, but just know that the treatment for breeding animals is different upon sale than the treatment of raised animals.